All right, traders, we had an amazing day today within Trader Society. I ended up making 4 trades, 1 loss, 3 wins, and I had a very, very nice green day. I want to give a big shout out to Steven Top G. I want to give a big shout out to Mohammed. They were absolutely crushing it today within the chat. Every single 30-minute candle analysis that I gave today was spot on and accurate, man. And we predicted the bottom of the SPY days in advance. We kept on saying the best level for calls to buy the dip is at 404. If you guys have been following along, we called this out several days in advance. If you're looking to buy calls and get in on the best level, it's going to be once this gap fills. You can see the gap right here. There's a gap to fill at 404.36, big upside potential with gaps to fill above. Once it hits that 404 level to 403.74, we're going to be interested in buying calls. And we had many traders hit that dip in the 405 zone multiple times today, getting in at the exact bottom. Strategically planned in advance. As I had clearly stated, the best level for calls is $404. With that being said, here's what I'm going to do for you in terms of this lesson. I'm going to be sharing with you unique price action trading strategies that you can use to make money within the stock market. I'm going to be teaching you how we use these price action trading strategies with 30-minute patterns in the 1-minute time frame. Every single 30-minute direction that I gave out today was 100% spot on, and people did very, very well within Trader Society, man. I got to give a big shout out to Steven Top G. He absolutely crushed it today. He put in 200K at the exact bottom of the SPY, and it just kept on trending up throughout the day from his entry. Big shout out to Mohammed. He's been doing extremely well as well. For those of you who are already in Trader Society, if you want to reach out to Steven Top G within the chat room, and if you want to join his own separate program as well for further education mentorship, you can shoot him a direct message and we will get you in there. It's not that expensive. It's very, very cheap. Let's get straight into it. So in terms of SPY, what I'm going to do for you is I'm going to be teaching you some strategies in the beginning of this lesson. You can use this information to try to profit in the near future. Then towards the end of this video, I'm going to give you my new update on the SPY, best level for calls, best level for puts, and the new price action analysis, right? So based off today, I'm going to be recapping some of the trades that were made. I'm going to be showing you how to identify patterns that you could profit off of, right? So what I'm going to do is, and what you need to understand about this strategy is, I like to look at daily charts. I like to look at patterns. I like to look at 30-minute time frame. The 30-minute time frame, if I see a clear pattern at a key level, it's going to help give me the direction for where the market is going within the next 30 minutes. So if it's bullish, that means it's going to try to go bullish for 30 minutes. And instead of just buying and holding calls for 30 minutes and selling, what I do is I will make 2 to 3 trades within those 30 minutes on the side of the trend. So if I think SPY is going to go up for 30 minutes based off of a key level and a pattern confirmation that I see, I will look to buy dips at my key levels on the 1-minute time frame, sell into the rips very quickly, and then rebuy the dips at the previous resistance breakout levels. You can write all that down, right? And then the inverse in terms of buying puts, right? But we're going to keep the focus on call side because that's all I was focused on in terms of today, was just buying calls at our key levels. So how did we come up with this 404 level? So first of all, what do we know about $404? We know, as you could see right here, 405s, and as you could see recently, the recent short-term history is what's really going to matter. We know right here, this bottomed at 403.78, which was the most massive bear trap. So a bear trap is when the bears get trapped. They try to go short and they get squeezed. And it was such a massive bear trap because within just 4 days, this ran all the way to 417.62. So in terms of buying low and selling high, what would be the best price to buy calls? At the exact lows before it had that massive run up. Miss out on the move first, buy the retest, right? So those are some basics in terms of, support, resistance, supply, and demand. But that's what you want in terms of scalping and buying calls. You want to be buying calls low with levels that have not been tested. So 404, this was never tested. It bottomed at 403.70 and it had a massive run up. It was never tested. It bottomed at a price, it was oversold, and it had a massive run up. When it retests, so when it goes back down to that level, right? So you set your price alert, you see, oh wow, this had a massive run. I'm going to set my price alert at 404 like we did days in advance. That's where we're going to buy calls because it's the best price possible, right? Support and resistance, best price possible. Now, what is one thing that you can add to your trading arsenal? You can add gaps. What you need to understand about gaps is when they are oversold, they can have reversals. When they are overbought, they can have reversals. So this is an oversold support level where a bear trap was going to get created, right? A great level to be buying. Now there's a gap here. There's a gap at 404.36. How do you see that? Well, this white line, this is the previous closing price. As you can see, the previous closing price was at 403.36. On the opening of this daily candlestick, it opened at 407. So since the stock opened up higher than it previously closed, that means that it gapped up, and you could see the empty space at that white line. So another strategy that we use is when we see stocks that are oversold, that have overreactions, so big gap up, big overreaction to the upside, then big gap down, big overreaction to the downside, this is what we thrive in. We thrive in key levels, big upside, big downside, bear and bull traps. We thrive in overreactions. This is what we want. This is our perfect chart. We want a big gap up, we want a big run up, then we want a big gap down, a big crash. When the stock goes back down to fill this gap below, and you want this all to happen quick. You want these big moves and overreactions to happen quick. You're going to see them happen the most when the news comes out, when there's FOMC or some sort of news event, right? But that's what you want. The quicker it happens, the better. The bigger the move, the better. The bigger the overreaction, the better. But basically what you're looking at, right, this like triangle, this is what you want. This is like the perfect chart to be doing this on. When it fills this gap, it could potentially have a reversal. So it's crashing down to fill the gap. Once it fills the gap, it could have a reversal. Then it could start to explode back up to fill the gap that's waiting to fill above. You have a gap to fill above right here at 408. SPY opened up lower than it previously closed. Previous closing price was 408. It opened up lower. So it's going to start to try to fill that gap like a magnet, right? So you can write all that down. Target the gaps with what I taught you about support and resistance. So what would be the best level for puts? Well, you can see right here, there's major resistance at this 415 level, and there's a gap to fill above at 415.50. So would the best level for puts be right here towards the lower end of the channel? No. The best level for puts would be at 415.50. But will I be targeting puts at 408 for a quick scalp with a tight stop? Yes, because the initial reaction should be a rejection once we hit 408 for just a small move where we get in and out. We're not holding very long, right? But it should be a rejection. And the reason why is SPY had a massive drop from 408 and it filled the gap at 404. Now it's trying to reverse. So if it instantly shoots back up to this previous support, see the support at 408 right here with big upside potential. Well, since it cracked, it should reject initially. And it had a massive drop from 408, which is great for puts on the retest of 408 with a tight stop. Because you know if 408 turns into a floor, it's going to try to go bullish, then it's going to start to skyrocket and try to fill the next gap at 415.50. But we do know in advance, 415.50 is the best price for puts, right? But you need to write all that down, man. So write all that down. That's the strategy that we're using. We're using the 1-minute candlesticks and the 30-minute candlesticks to actually confirm if it's going to have a reversal. So some key notes, if you watched my video yesterday, I brought awareness to a pattern in terms of, well, what's one confirmation that you can use to buy into a bullish uptrend towards the bottom, right? What's a strong confirmation you can use to actually do that? And this was the confirmation that I brought awareness to, right? So let me just disable extended hours real quick so you can just see this clearly. So this is what I told people. If the SPY, and it's been doing this for 3 days now, this pattern worked 3 days in a row. When the SPY has been dropping on the 30-minute, right? So bearish 30-minute drop, bearish 30-minute drop, bearish 30-minute drop, right? When it's been doing that, when has it bottomed and flipped bullish? When it formed the first 30-minute green candle. I told my chat, best level for calls obviously would be 404 and wait for the first 30-minute green candle. So you can see right here, it did it earlier, right? Earlier this week. SPY was dropping, and then when did it start to have that bullish reversal? Once it closed that first 30-minute green candle, it started to trend up. You can see right here, SPY was dropping, right? When did it start to have that reversal? Once it formed that bullish 30-minute candle. And you want to do this at support. See, right here, it's at resistance. You want to do it at support. So when you see a bullish 30-minute green candle at support, when SPY's having a big sell-off, that could be one confirmation that it's going to start to trend up for the next 30 minutes, right? And you could even see it did the same thing again. I told my chat, wait for the 30-minute green candle. So right here, this was the first 30-minute green candle. When it closed, what did the SPY do? It went higher. That's a nice scalp. You buy into the opening of that. You could add if it drops a little bit lower, and then you sell into the rip. And you can make 2 to 3 trades within those opportunities, right? And you can see it starts to drop some more. Green bullish 30-minute candle at our key level, 404. Then it starts to trend up, right? So that's one confirmation that you can use. If you see something having a massive sell-off and then it hits your key level, or if it hits a gap and you see a bullish 30-minute, it's going to try to trend up for the next 30 minutes. That's one confirmation, right? But just look at this beauty, man. Look at this beauty. I mean, even right here, right? SPY's having a massive sell-off. Look at the massive sell-off. It forms the green 30-minute, then it reverses. It tends to work out very, very well, but you want to do it at key levels and you want to do it at gaps. Now, what are some other confirmations you could have used for trades on puts and calls today, right? So one thing that I want to bring awareness to is, and what I've noticed is, so I want you to study this candlestick. When you see the SPY at a key support level like this and it forms like this top wick, see how it did it right here as well? It's at key support and it forms this top wick. The next 30-minute candle, when it opens, it tends to retest and break above the wick. See how it retests and breaks above the wick? See how it retests and breaks above the wick? That's what it tends to do if it's at support. You got to use it at support, not at resistance, right? If you use these patterns at resistance, they're not going to be good. So you got to use them at support. But what are some other confirmations on the 30-minute chart that you could have took advantage of? The bullish hammer. This right here is a very nice bullish hammer. Take a look. You have a bullish hammer right here. You have a bullish hammer right here. Look at this candle on the left right here. You have a bullish hammer. And then look at this candle right here. It's the same candlestick. You have a bullish hammer. You have a bullish hammer. What does it do after the bullish hammer on the 30-minute? It goes up for 30 minutes straight, right? So what I love about the 30-minute chart is, I would say, it's so for me, it works extremely well. Out of all the time frames that I tested, the 1 and the 30-minute work extremely well. But what I love about the 30-minute time frame is it's a very good combination for making 2 to 3 scalps within those 30 minutes, or just the overall next 30 minutes of price action. In terms of a very solid scalp, if you're not looking to hold very long, you're just day trading scalping, 30 minutes is a very good time frame for a nice trade to be made within those 30 minutes. And I found it to be the perfect balance of a confirmation just smoothly working out within those 30 minutes. You could see the bullish hammer, and then it just goes up for 30 minutes. Bullish hammer, and then it just goes up for 30 minutes. So if you see that bullish hammer and then SPY's starting to drop on the opening of that next 30-minute candle, you buy into that dip, you buy into the drop, and you get the best entry, right? So that's another one that could have been taken advantage of. The bullish 30-minute hammer, the bullish 30-minute hammer, right? Now, what would be another confirmation in terms of, let's say, puts? If you were to short the SPY, what would be something that is triggering or signaling bearish? And again, you want to use these at resistance levels. So this is one that I called out. I said the next 30 minutes should be bearish. So when this 30-minute candlestick closed like this, you can call this like a trend reversal bearish candlestick, and you know it's at resistance because the SPY had resistance earlier before that, and it rejected very, very nicely to new lows, right? So it's at key resistance, and it forms the first red bearish trend reversal candlestick. When this candlestick right here closed like this, I told my team the next 30 minutes, so this candlestick right here, I said, should be bearish, and it was, and it continued to drop. Great opportunity for puts, right? And it was at key resistance on the day's chart, right? So how did I confirm that it was bearish? Well, one, I said, okay, it's at resistance, nice downside potential, right? So it qualifies for my pattern recognition if I'm going to do puts. And number two, look at this candle. You're going to see a lot of similarities, right? Look at this candle, and it's at the day's resistance, right? When it hit this resistance, it went to new lows, so it's already confirmed resistance. Now compare it to the candlesticks that I'm going to show you. You're going to see, wow, that's like the same candlestick, and it continued to drop. So right here, very similar candlestick, and what does the SPY do? It starts to drop, right? So you see that. Let's go to more examples. There was more. So you can even say right here, it formed that similar candlestick, and then it started to drop. It had a drop before it recovered. Right here, same sort of candlestick, and what did the SPY do? So it formed it right here, very, very similar. So you could see the similarities, right? This is just a larger time frame scale. It's a bigger move because of FOMC, but you could see, look at this. This is what mainly influenced me to call out, an opportunity if they want to play puts here, was if you compare the left right here, it's at resistance, right? So this is at resistance yesterday, and you have this bearish trend reversal 30. Look at this, man. Look at it. That's perfect. That's what I saw. Look at this. Compare this green candle and this red candle. Compare this green candle, compare this red candle. And look, it's at resistance, it's at key resistance, right? So it's at resistance on the day. What does it do next 30 minutes? It starts to drop. You see how well that works if you compare the left to the right-hand side, right? And we're calling this out in real time. So we're waiting for these 30-minute candlesticks to close. And then when we identify a pattern, if it's at our key level support or resistance, we will call out the puts or the calls. And we will look to make 2 to 3 scalps within those 30 minutes, or you can just try to hold for the bigger move, right? If you can do that, you want a better entry. But I'll typically make 2 to 3 scalps within the 30-minute directional move, right? So for example, if the pattern is bearish right here, so if we're bearish when this closes and we want to do puts, what are some scalping opportunities that we can do? So let's go to this time frame. I'll give you one example. So this is at 2 p.m. was the opening of that candle. So if we go towards that 2 p.m. range, so right around here, what would be some examples? So right here, you can visually see you have support. This is support. And then when it cracks the support, if it bounces back up and forms a top wick, watch my lesson. That's the same strategy. I talk about that all the time. When you see the bearish pattern on the 30-minute, it cracks support. So this is your support. It cracked. Look at the wick. You see the top wick on the green, top wick. The roof, the same roof that I used to buy puts yesterday is now at the previous support. That's bearish. And then it goes lower. You see that? And then you could do the same thing. Where's the previous support? Previous support is right here. The roof, you scalp the highs of the roof, and then you sell into the dip, man. That was 2 opportunities that you could have scalped, right? So you see the examples, you see how we're scalping it, right? Now, in terms of any other patterns, was there any other patterns? Yes, there was another opportunity for calls. We hit this one, man. This one was a beauty. This bullish wick. It's nearly at the low of day, and it's forming this bullish trend reversal 30-minute wick. That's why I was calling out calls on the next 30-minute candle for a spike to 406, because this is a bullish trend reversal 30-minute candlestick. See the bullish trend candlestick at support. See the bullish trend reversal candlestick at support, right? So you see the similarities. You can even go back and see, look, here we go again. You have the bullish wick, right, towards support. And you can go back in the time frames. You can go further back. This is a 10-day chart, but you can go further back and you'll just see on how well this works at our key levels with these gaps and the way we call it out with support and resistance, right? So if we're bullish due to this key support in this bullish 30-minute candle right here, and then obviously the call opportunities for this bullish hammer right here, what are some examples to buy calls? So let's see. So this candlestick closed, so 3 p.m. Oh, another reason why I was bullish as well is because power hour. It's going to try to run during power hour because it's oversold, and that's when all the volume is going to start coming in, where the bears are going to get squeezed a bit. Plus, we have a gap to fill above 408. So what would be some examples? So let's draw an over right here. What would be some examples of some scalps on calls, right? So for calls, we're scalping dips, we're selling rips. For puts, we're scalping rips and we're selling the dips, right? So let's go to that 30-minute candle. I'll quickly show you just one examples on some scalps. So you could see right here in terms of the SPY, it had previous, so this was some resistance. You had some resistance at 405. It had a small drop. When it turns 405 into a floor, you can start to buy. So it's forming a floor right here. Buy that, and then you sell into the rip. And then when it drops back down towards previous resistance levels, towards 405, right around here, you could start buying the dip again, and then it went straight back up to 406, right? So those are just some confirmations. Those are just some examples. But you can see, man, there was so much opportunity at our 404 bottom support level. You could have played this 3 times. You could have bought it here. You could have bought it here. You could have bought it here. That was just such a good level where you just kind of have to get in. And even on the 1-minute time frame, man, the 1-minute time frame had very nice confirmations. Look at this, man. So what you need to understand is this right here. This is a very bearish candlestick, but it's a trend reversal candlestick. So it formed at our key level. If you see a bearish trend reversal candlestick at the best support level, it's likely going to reverse and spike because it's a trend reversal candlestick, right? That's another thing that people get confused. If something looks bearish at the best price, it might not be bearish. If something looks bullish, when I say the best price for calls, if something looks bullish at the best resistance level, it might be a key confirmation for reversal. I see people get faked out on that all the time. But if you're seeing consolidation, whether this is a bearish or bullish doji, it's likely going to reverse. So that's another tip you can recommend to write down. But look, you have the bullish wicks right here. You have the consolidation. You have the slanted sloping support. And then it bounces, man. All great confirmations on the 1-minute chart, man. When you see those wicks at that best key support gap level, whether it's bullish wicks or bearish wicks, it's likely going to start to spike. And you could just see, man, this is what you want. When you see the consolidation, the trend reversal candlesticks, bottom wicks or top wicks, that's what you want to be buying into on that 1 minute time frame. So there was so many confirmations on 1 minute. There was so many confirmations on 30 minutes today. And it was a beautiful day, man. So with that being said, now that you guys have a better understanding of some of the strategies that we are using, what should we focus on heading into Friday? So Fridays are known for being my best trading days of the week. If you do want to join Trader Society, it's a one-time fee, it's lifetime access. It's the first link down below in the description. But in terms of what we will be focusing on heading into tomorrow is going to be a 405 and 404. So 403.74 and 405. That's going to be our support zone. If we see bullish reactions at those levels, we're going to be scalping calls. Obviously, the lower level is the best level. If it does end up cracking somehow, 403.74, then we will be looking to dip buy calls at 401.35. The next gap is at 401.35. And look at this, man. We call this out. I also said 403.70. Look, there was a gap to fill at 403.70. That was the exact low. You had this gap to fill at 403.70 with big upside potential. It ended up bottoming at the lower one. Go with the more oversold ones. There was a gap at 404.30, but the low of day was at the more oversold lower gap at 403.70. You see that? That's the beauty. So it's like a zone, but you always want to aim for the bottom of the zone, right? So if we do somehow end up blowing through 404, then I will look to get calls at 401.35. That will be my next level. So a zone we're going to be watching is 404 to 405. If we do calls with bullish confirmation get stopped out, then we wait till 401.35, or if it looks bearish and we just sit out, then we wait till 401.35 to hit calls again. So you could write that down. Now, in terms of puts, the only level that I'm interested in doing puts on personally is $408. So we have a gap to fill at $408.02. Why is this a good level to scalp puts? This is why. You can see 408 used to be support, and it had a big move to the upside. It went all the way down to 414. As you know, if support cracks and reacts as a resistance, instead of having that big move to the upside, it's going to have that big move to the downside. There was no reason to buy calls at open at that level I spoke about yesterday at 407 because it was just bearish. It was just a bearish downtrend. Wait for the first 30-minute green candle to form and wait for the better prices at 404, as we stated was the best level if you've been watching the videos. So the reason why puts would be a good idea at 408 for a quick scalp is because we had a massive crack from that level. So if you see it struggling at 408 and reacting as a resistance, bearish confirmations, get in on some puts and set a max pain at like 408.50 or 408.80. Don't risk too much above the previous closing price, and then ride it back down a little bit. Try to ride it back down to just 407. Nothing too crazy. But initially, we should reject 408. We are obviously extremely oversold, which is why I'm not going to try to say that's going to have some sort of crazy bearish move and reversal at 408. But in terms of a quick scalp for the initial reaction, the first time it tests, I will try to hit a put at 408 with a max pain of 408.80. If you hold through the max pains, you will experience massive losses. If you do not cut your losses quickly, you will not be in this game for the long run. You must think of your entries as nearly stop losses. If you are getting stopped out on your trades, you are not getting the best entries. If you are getting the best entries, you will likely not be stopped out on your trades unless you're just completely wrong about the direction. And then, you just got to get out in that situation. But if you find yourself getting frequently stopped out, then something's wrong with your entry. You should not be getting stopped out frequently. Only 3 out of 10 trades max. If you want, you could do starter positions as well. It all depends on the trade, the opportunity, whether you're trying to hold longer, whether it makes sense to hold longer because of confirmation or at such a strong key level. For example, like what would make sense to hold a little bit longer and kind of scale in? Well, if you want to do calls at 404, it makes sense. And if it drops to 403.70, it makes sense to add, right? But don't risk more than like 403.30 or under 403. Don't risk more than that. But it kind of makes sense to hold from that level a little bit instead of just scalping so in and out quick like we usually do, because it's just such a key oversold rare level with big upside potential. And you need to understand what's important is the first reactions, right? So when this goes from 404 to 417, people are going to forget about the 404. That was where the massive bear trap got created. They're going to forget about it. So the point I'm making is the first time you need to set that price alert when that overreaction to the upside happens, you set the price alert at or below 404. The first time it hits 404, man, it's very high probabilities that we see a reversal for a scalping opportunity. It's very high probabilities when we go back to 408 for the first time that we see a small pullback. It's very high probabilities when we go back to 415.50 for the first time. It's very high probabilities that we see a pullback. You need to pay attention to where these massive bull and bear trap levels are getting created. Set your price alerts at these levels and just focus on trading these levels, guys. And you need to understand the importance of that initial reaction, man. There's going to be so much lack of preparation for the first time this hits 404. It was just at 417. No one's thinking about 404. But I am, because I know it's the best price. It might not hit tomorrow. It might not hit a week from now, but maybe a month from now. But the point is, when it hits, it's going to be the best price to buy the dip. You cannot forget about it. That's why all these levels that I'm giving you in these videos, they might not hit tomorrow, but when they do hit, make sure you have your price alert set, because these are the best levels, folks. We prepared for this days. It took us days to go to 404. Sometimes we wait weeks. Sometimes we wait months for macro trades. Those take a while to get in on the best macro swing trades. It could take a while to go back to 415, right? But the point is, when they hit, we get in. We just get in. 415.50 is your best level for puts. 408, we'll see a rejection. 404, 405 zone, we're interested in calls. And if we crack through that, we're looking to buy calls at 401.30. Those are my levels. So again, my key levels for tomorrow, 401.35, gap close reversal. 403.70 is like the lows. 405 is like the make or break gap. If it reacts bearish, then it's going to try to go bearish. If it reacts bullish, then it's going to try to go bullish, start to fill the gap at 408. And then 408 for a quick scalp on puts. So basically, our four levels for tomorrow in advance: 401.35, 403.74, 405. 405 is the make or break level. If it reacts bearish, we try to crack the lows. If it reacts bullish, we try to fill the gap at 408. And then 408, very, very simple day, man. And again, the lower levels are the best for calls. The higher ones are the best for puts. Like I said, for puts, I'd mainly focus on 408. But like I said, if 405 is strong resistance, they're going to try to crack. If they crack it, then 401.35 is the next level. Use tight stops, trade the best setups at the best prices. With that being said, if you want to join Trader Society, it's going to be that first link down below in the description. It's a one-time fee. It's lifetime access to our community, to our moderators, to the members within the chat. We have many members within the chat who are consistently making 5 figures every single week. We have some big hitters who are making 5 figures daily. Today was a massive day within the chat, over 6 figures collectively as a whole. If you want to be a part of Trader Society, my team, first link down below in the description, you will receive daily updates, my real-time trader alerts, not just my real-time trader alerts, the moderators within the chat who are crushing it. I'm telling you, these guys are unbelievable, man. Steven, Mohammed, Dimitri, Jim C, these guys are unbelievable. These are the best, some of the best traders that I've ever seen to exist, especially Steven. Steven's the best that I've ever seen. And I've been doing this for over a decade. And I'm telling you, he is the best that I've ever seen. For those of you in Trader Society, you can also message him and you can join his program as well. It's only like $2.30 a day. But anyways, if you want to be a part of it, man, live trading streams, and you get the recording to the stream as well. So you can go back and watch and learn from it. You get the full access to the stream and the recording if you can't make it, or if you just want to rewatch it. Real-time trade alerts, the analysis, my key levels, my daily updates, all the real-time analysis. Basically, what I'm doing in these videos, levels change, thesis has changed, and if I see confirmation as well, everything within the market real time, I post it in the SPY floor, right? And then we go live on stream as well throughout the week. And then you also get access to Video Lesson Library, the course. There's so much more to it. If you want to check it out, if you want to join now, it's the first link down below in the description of this video. It's a one-time fee. It's lifetime access. I will see you guys tomorrow. Fridays are known for being my best day. This has been a phenomenal trading week, folks. I'm telling you, man, it's been a very, very generous week in terms of the portfolio. I ended up paying myself, throughout these past 2 weeks. I ended up paying myself fairly well. Always make sure you guys are, withdrawing and taking out your profits, especially weekly. I ended up pulling out $77,000 from one of my brokerage accounts. Always make sure that you guys pay yourself weekly and use some of your money to invest into your education, invest into yourself. This program itself is a tax write-off. I've spent so much money, I've spent tens of thousands of dollars on education just from trading, and tens of thousands of hours into this, man. This is my life. And you can write, education off as a tax write-off as well. So with that being said, man, invest into yourself, invest into your businesses, invest into your dreams, invest into your passions, invest into things that are going to, that are going to produce more money for you. Plant some money seeds, man, and surround yourself with the right network and the right community, man. So I will see you guys within the chat tomorrow. Thank you guys so much for tuning in.